Good morning, everybody. Welcome to Trade Live with IG for Thursday. I forgot what day it was there. Thursday, the 23rd of October. It is me, Chris Beecham, in the chair this morning, joined by the inimitable, the irreplaceable Aaron Bright.
Hello, Chris.
Good morning.
How are you?
Thank you for having me. I'm very well. Thank you for coming in.
Oh, it's a pleasure.
Early in the morning as well. I know it's a bit early for you.
No, it's all right. I'm actually an early riser. I am.
You fund managers don't usually start this time. You sort of drift in about 10 o'clock.
Oh, yeah. Yeah. We know that you like to get in at, what, 4:30?
It's the moral advantage you see when you come in and there's nobody else in the office. So, yes. What a lovely day. Good morning to everybody in the chat. Good morning, London Guide. Good morning, TARDIS. Morning, Jugger, Parky, 1977. Maturin, they're all here. The gang is all here this morning. And what is a beautiful day in London. It was tipping it down when I left the house this morning. It was wonderful.
I left my house today and I could just hear the trees howling.
Yes, it's always great, isn't it, where you can hear the rain before you leave the house.
Yes, and I was hoping that that wouldn't be a foreshadowing event of the day to come, hopefully.
When do the clocks change? Next week?
This week, I think.
This weekend? Oh, no. Okay, fine.
Going to be in perpetual darkness now.
But yes, exactly. I always get to work and leave work in the dark and leave in the dark for most of the year, so it's fine for me. I don't mind. Excellent. So, shall we see what's coming up this morning? What have we got? Aaron, do you want to take us through?
Yeah, absolutely. We've got overnight action with myself and Chris Beecham right now, and then we've got the opening bell at 8 o'clock. 8:10, guess the chart. 8:15, myself and Martin Harris are going to be tuning into Man versus Machine. We're up against AI, trying to beat them at managing a portfolio. 8:30, Expert Edge with Rich McDonald and Julian Wheeler. And 9, Expert Edge with Rich McDonald and Sammy Ellard King, which are, of course, rebroadcasts.
Like the BBC, we're going to run repeats. Good. Fantastic. Any clues on how well you've been doing this week in the portfolio?
Well, let's just say that some of our bets are beginning to pay off, but I'm not going to reveal too much. You're going to have to tune into the segment to find out.
Of course.
But I'm pleasantly surprised when I was running through the data. So.
And you're still battling Martin to get that cash allocation down? No?
Well, it's a complicated one because it's markets are high, and we saw even in a volatility event last week where the S&P was down about 2.8 in a day, and to
there was your gap, there was your dip. You should have bought it.
Exactly, and it's recovered, but it's just if there is a sudden change in sentiment, and then we deploy our cash too early, it's feels like we're performance chasing a little bit.
That's why you win the big bucks, isn't it, for being the fund manager? Good. Should we go to overnight action?
Let's do it.
Let's talk about what we've had overnight. Big moves overnight being oil prices. Do you see this one?
Yes. It's all due to the Russian sanctions, I believe.
Yeah, the man himself has decided to fall out with, let's see it on the chart, I think probably is, if he decides to fall out with his friends in Moscow, or he likes to call them friends in Moscow. I'm not sure they're very friendly with him, but anyway. So oil prices surging off those lows we saw earlier in the week, because obviously because he's not going to Hungary now, not that he really was in the first place.
No, and there was all rumours about what would happen if he flew over Polish airspace and whatnot.
Yeah, the Lovin has been cancelled this time around again, so it looks like he's trying to put pressure on them in a very different way. So that's why you've got oil prices on the up this morning. So we've got Brent currently trading at 64.45, US crude back above $60 a barrel. But of course, if you look at that, it's been a sell the rally trade all the way through.
Definitely, yeah.
You wonder how much that changes.
It reminds me of a few years ago when we were, $100 a barrel.
Remember, let's not talk about that one. Every motorist remembers that one. And then, of course, you had a bit more weakness in Hong Kong and China stocks overnight because he's talking about, what is it now, curbs on, the headline. Oh, you see I prepared for this, can't you? There was a China story about more sanctions on China or trade limitations.
Yeah, I mean, in general with China, there's just an enormous amount of volatility at the moment. As you can see from that chart towards the right-hand side of it, as we get closer to today's date, and it's really just as a result of the changing rhetoric around trade and tariffs, and we just know how volatile the index can be, really.
Yeah.
With regards to how Trump changes his mind.
Very much so. So yeah, China overtaking US as Germany's top trading partner. And also, I think there was a comment that they were going to consider curbs on exports to China made with US software. So it just continues to rumble in the background, really. Yeah. But they're still expected to meet, aren't they, in South Korea next week?
sounds a bit like a cold war brewing.
Yeah. Well, it's brewing even more so, yeah. So your security dilemma coming through. So that was a bit of pressure. And then also the Nikkei off a bit, really just the hangover still coming through from the election of the new PM.
Totally. And we were just discussing earlier that, if you'd bought a Nikkei tracker in sort of around the 10th of April, you'd be up over 50%. So there's definitely elements of profit.
You may have been deterred for one reason or another from buying at that point, but yes, 50k. I was wondering which, I think the Nikkei is still edging it, isn't it? But Nikkei or Dow to 50k first. Sorry, my Dow chart not working, which is always great, but yeah, this is the key one. Which one crosses the nice big round number first, and then what happens?
I think it could be the Dow, maybe.
Probably. Yeah. That's definitely a poll. Definitely could be a poll for that one.
I think
which one gets to that?
It could go quite close, but the Japanese index has some interesting volatility events if there's a change in sentiment there.
Yeah.
And we saw, about 18 months ago, the infamous carry trade debacle really throw the index into a bit of chaos.
Because you've had to have the patience of a saint or a Japanese Zen master, if you like, to hold the Nikkei through.
It was called the Widowmaker's trade.
Well, exactly, to hold it through 3 visits, really, in the space of about a year to 30,000 or so, and then right back up again. So it has paid off in the end, but it has not been easy. No. You haven't had the smooth ride you've had in US stocks, have you?
Beloved US.
In beloved US, I know. But there we go. Fantastic. Good. What else have we got moving this morning? Should we look at the newspapers? Should we do the headlines?
Let's do that.
Let's get my headlines up. Let's do the FT first. Here we go. Front page, the FT. So there we are. US imposes sanctions on Russia's Rosneft and Lukoil.
That's definitely why we're getting the reaction in oil that we sort of are beginning to see sort of soak into markets, I guess you could say.
Yes, a terrible, terrible pun. Yeah, so that's going to be an interesting. So if there's further to go on that one, whether there's any, and whether he does change his mind again on those Tomahawk missiles.
Absolutely. Yeah, that's a big one, and I guess will determine, the bullish and bearishness towards peace.
Very much so. But then a lot going on, of course. We've had Tesla.
Yes.
Tesla profits last night. So
down 4%.
The stock price didn't do well. And again, after Netflix, which also, Netflix, you have to be fair to, they missed it because of that Brazil tax charge.
Do you think there's just so much expectation baked into tech stock earnings now that even if you get a strong earnings, that's just like not quite in line with guidance, you're just going to get investors throwing tantrums?
There is a certain element to that, but you would say you've got a profit to drop more than a quarter.
Yeah.
Even though you had record car sales. And yet the shares, they were down, what, 10%?
And with Tesla, it is a quite unique stock that it's almost a political stock in a way.
Well, yeah, this was highlighted in the FT article saying, of course, that adjusted net income was down 29%, but also I think the concerns that what Musk has been doing over the past year has obviously detracted from the stock.
Definitely.
And also this looming argument between the shareholder base and Musk over whether he gets his massive pay package.
Yes.
That's certainly been the key thing to bear in mind.
Absolutely.
And the rising EV costs from those rare earths.
Well, yeah, it's an enormous cost to import these rare earth materials and to convert them into batteries with, I think, lithium being probably one of the major ones being used. And we know that China has got vast swathes of lithium, and I guess, from the US perspective, they're going to want to keep China sweet in order to get that lithium to achieve their net zero targets. But I guess with Trump in power, we know that drill baby drill is back. So
it is.
How much push is there going to be towards clean energy? That is the question.
Precisely. So there's your, look at that. That's your chart for Tesla. It's going to, I think we need to clean that chart up from what that price movement. But so let's do it on a weekly, shall we? There we go. Oh, I definitely need to get somebody on that chart. But so the record, not quite record highs, just about a week or so ago, 2 weeks or so.
I mean, that looks like something you'd see at Thorpe Park, that chart. I mean, it's a real roller coaster.
It's been definitely the ups and downs, but it's held up relatively well.
Yeah.
Just moving sideways. So I think the interesting thing, perhaps, you're right that they are dealing with high expectations at this point.
Definitely.
But maybe the fact that they haven't reacted even more poorly to those results is maybe the interesting thing. You had Netflix down another sort of 5% yesterday, down to 10% overall.
Yeah, I think the investors know that the earnings have been still within range of a pleasant earnings season so far, but not too.
It's not quite the sort of exuberant
Yeah.
season they were hoping
And I think
for.
elements of that is that we were, I think for about 3 years, every earnings season was like, okay, is this going to be the one where we have rates be detrimental to earnings because they're going to squeeze the consumer so much? And we haven't. So the guidance and outlook has always been, I guess, slightly lower. And then earnings have come in, smashed all expectations. And now they're not quite smashing them as much. They're doing okay, but I think, yeah, that's why investors are not as worried as one would expect, but they're still, a little bit concerned.
Definitely. The other news this morning, Lloyd's, of course, reporting everyone's favourite stock on IG.
Absolutely, yeah.
So another, if you get on the screen, get the screen up, Lloyd's, another dire number from them. Of course, we knew about the car finance impact.
Yes, definitely.
But 800 million charge to the car finance. Bank and mis-selling, and again, in a sentence, is like seeing 2008 all over again, really.
Yeah. If you had £1 for every time you wrote an article about that.
Exactly.
But I think the FTSE in general has had a decent.
Well, yeah, we should come to
days.
that one yesterday. Let's just finish off with Lloyd's first. We kind of all in the news with this. The group performing well, strong capital generation. And again, let's have a look and see where we are with the share price in Lloyd's. There we are. As one of the solid, well, it's quite good dividend payer, of course, as well, isn't it, really?
Yeah, it is a chunky one.
I wonder what the indications are we've got for Lloyd's. I don't know. I have to wait and see what we get for that in terms of opening up or down this morning. But there is your steady rally. There is your steady bounce in the share
Not quite as
price.
volatile as Tesla.
Not quite as volatile as Tesla, for which I'm sure Lloyd's shareholders, that's why they're in Lloyd's rather than in Tesla. But a high street bank to double in the space of, it's nearly 2 years now, of course. But they finally come back into their own.
I mean, yeah. And I think an element of that is, I mean, they were just so brutally attacked during COVID, metaphorically speaking. The stock prices and sort of UK equities in general were just at such lows during that period. I think there's definitely elements of a sort of, a bit of a bounce back from that. And there's been, speaking to other fund managers, I think the rhetoric for a while has been UK equities in general have been so unbelievably cheap that eventually they just need that little oomph. And then, once they get that little oomph, whether it's through government policy, interest rates, whatever, that there will be a rally because the actual underlying fundamentals are quite positive for these equities.
Well, because this we were talking about before the show with the news from yesterday and the UK CPI figures.
Yeah.
What was your take on that?
Well, I mean, it came in cooler than expected, but we're not getting like a 1% inflation print. It's still, nearly 4%. So it's better than one would expect, but it's still nothing to write home about. And obviously, as we were discussing earlier, we saw the FTSE really go on a bit of a blistering run yesterday. I mean, nothing too crazy, but I think it was around 1% upwards or 0.9%.
Yeah, I think it
upwards. And we're seeing the likes of house builders rally, and people are getting over exuberant, in my opinion, about the prospect of a potential rate cut before year end or very early next year, just because an inflation print is slightly better than expected, but it's still not a good inflation print.
No.
It's I wouldn't be happy if I was Andrew Bailey and I was delivering 3.8% inflation every year, because
obviously nearly double the target.
Absolutely, that's the issue.
I suppose again
We're so starved of some degree of moderate inflation.
Markets forward looking, etc., etc. That the hope is that, and it was the second month in a row that that core CPI declined, which is not a sentence you've been able to utter about UK inflation for a while because it's so much higher than the continent. But as you can see, there's your FTSE 100. We are knocking on the door of those record highs once again. So I like to knock the FTSE, I have to say, because it's full of companies that, compared to obviously the glamour you get with the US and the cash generation, the profitability you get with the US, it pales in comparison. But it has had a very good run.
It has, yeah.
It's been a strong beneficiary of the kind of escaping the US area.
Yeah, and if you saw this chart and it didn't have a label on it, I think people would say, oh, that looks like a US equity, or that looks like a US index if it didn't have FTSE 100 plastered across it, because the returns have been impressive, and is obviously a very core holding that we have in our portfolios, and it's been pleasant looking at the returns of it every month.
And you are getting what, 4% yield? Yeah. I think on the index
definitely.
itself, and then but it was a day for the mid caps as well. Actually, we don't talk about the 250 perhaps as much as we should.
Well, that's definitely a rate trade, I would say. I think it's a rate and domestic focused trade. So whenever there's prospect of rate cuts, a lot of these companies are going to be quite growth sensitive. You know, when one talks about rate cuts, people favor growth stocks because it essentially increases the model value of a business through higher discounted present cash flows if you have a lower discount rate with interest rates coming down. And people think about that immediately. If an inflation print comes down, they automatically think, well, that means the interest rate's going to come down. That means these companies are, you know, have more prospective value. So yeah, it's definitely an interesting one. But I think the concern with the FTSE mid cap and the FTSE 250 is whether you know, if the domestic policy isn't as good from the government and, you know, the consumer's stretched, how well can these companies do?
Exactly. I think this is the key point. But maybe there was just too much bearishness about the UK economy. Maybe this was what we saw yesterday, that finally, after months and months and months of it, it's begun to look a bit cheerier. Yeah. And again, they're not record highs for the FTSE 250, but we are back at those highs from July, which is nice to see, really.
It is. So yeah, I think if the UK gets its act together, inflation and economy-wise, there are some fantastic companies there.
Very much so. What else have we got? What have we got this morning? What else has been moving? Unilever. We should talk about Unilever. See if we can find the news this morning in them. My website decides to work. No, there we go. Well, let's do the Times. Let's see if we can get the Times. Very slow moving. I don't. My network's not working this morning. Uh-oh. I was going to talk about Unilever. Rotating screen of death. I think. Should we go for a quick break? Should we see if we can get my internet working again?
Yeah.
Feed the hamster. We'll see you in about a couple of minutes.
Do you like the sound of tax-free trading? Well, that's exactly what spread betting enables you to do. This tax-free way of trading lets you speculate on the price of over 17,000 financial instruments, like shares, indices, forex, and commodities, without actually owning them. With spread betting, you can benefit from both rising and falling prices, letting you find the perfect opportunity. So if you think the market's going up, you buy. If you think it's going down, then you can sell short. Not only is spread betting exempt from capital gains tax, but it's also commission free. All you pay is the spread. With us, you're not alone. You're part of a wide community of traders that you can learn from. We've got the experts, the tools, and extensive educational resources to help you on your journey. If you're not quite ready to trade with real money, you can always give it a go on a demo account. Open an account today, join the conversation, and be inspired to make moves. Welcome to The Art of Investing, a brand new podcast to help you achieve your investing goals. Join me, Rich McDonald, and my co-hosts, Mark Spice Holden and Chris CJ Fellingham, every Friday when we bring you updates from the markets and insights from our combined 100 years of investing experience.
Welcome back to Opening Bell. We have chased the gremlins out of the network system, we hope, for now. Aaron.
Yes.
Talk about India.
Yes,
How
we've
about
got,
India
we've
in
got
the
an
chat?
interesting comment from Maturin about India and Korea ETFs climbing steadily. And I think this is just a reflection of the broad positive sentiment we've seen in emerging markets. As the sort of trade debacle, tariff debacle's cooled, emerging markets tend to just be a beneficiary from it in general. And I think they're the best performing index this year, just the emerging market bundle, because I was looking at some figures for a webinar we did on the smart portfolios, and the emerging market returns have been fantastic after having a period of some really poor returns post-COVID, past couple of years. The returns have been excellent. I think one thing to watch out for with India is that relative to other emerging market regions, it does trade a bit of a premium. So that's something to watch.
Why is that? Why does it get that?
I think it's seen as a quite sophisticated market in emerging market, I would say, potentially. You've got some really strong pharmaceutical businesses, industrials in there, and I think it's seen as potentially one of the more safer ones. You've got an amazing tech sector. Obviously, there is disparity in India, but if you're looking at some of the regional hubs there, Mumbai and Delhi, you've got some fantastic tech, and Bangalore, of course, some fantastic technology and healthcare sort of hubs there.
Very solid performance in the ETF.
Yeah, really strong.
Just correlated essentially with everything else, stock market wise. But since early 2023, it really has found its footing, hasn't it?
Yeah, absolutely.
You've got this issue. Obviously, Trump has fallen out with Modi, and the closeness with Russia brings in that geopolitical element.
They've been benefiting as well from, I believe, some Russian trade. So that's another reason why I think they've been able to sustain, fairly good, strong performance.
I know. Talk about now. Don't obviously an ETF do that, do you?
No.
There's the South Korea capped ETF from MSCI, iShares MSCI.
Once again, I think seen as a beneficiary of relative peace with regards to trade. I think that's a big reason why we see South Korean stocks do well.
Talk about that breakout, really. It's been absolute storming performance.
Yeah.
Good. Yeah. What else we got in the chat? BME. Oh, we're going to do Antofagasta as well. Should we do Antofagasta first before we do BME, which is this week's disaster story? But Antofagasta, now there is the copper miner you wish you had bought. Look at that. Look at that absolute run from a weekly. But even on the dailies, more than doubled. Again, the number of things that have doubled in the past 6 months, or admittedly from those lows, but just seeing an absolute storming run is quite impressive. But the obvious beneficiary of those copper prices, a little bit toppy in the short term. You can sort of feel the volatility coming back through here at the moment, but an absolute.
Do you think that's related to the gold issues and just commodities?
Yeah,
in general?
as Andrew McKelvey saying, Antofagasta have reduced their unit costs and increased production of copper and gold. So just delivering on all fronts in many ways. And if you can keep those production costs down, you've got the price going up. You've got very much the virtuous circle to deliver for these miners, which is great news, of course, for the FTSE 100 as well. So Antofagasta, I'm still in Anglo-American. I just leave it to run and run. But
you had an unfortunate week on I think it was Tuesday, an unfortunate day.
Do you know, I stopped. I didn't even look at it. What have we got from Anglos? Didn't they pull out of a joint venture? I think it was.
Yeah.
There was something in a week. They clobbered the other company, and it was tiny mining company got clobbered by over 50%, wasn't it? I think it was. I'm sure the chat know which one I'm talking about. I can't think off the top of my head. Well, it's not too bad. It was nearly £30 a share in October. I'll take that. I was quite happy. BME. We should talk about the sort of disaster story of the week. Poor old European value. Has it found a low? The answer, our survey said no. We need that sound gallery, please. Can we have that? Get that one sorted, because this is what you had: finance director leaving, cost increases, profit warning,
Sounds like
all in one RNS.
Like a wonderful company.
It was a really wonderful start to the week for B&M, and it was
You're going to have a special situation fund managers looking at that stock inside out. Probably.
Oh, it'd been out dirt cheap on so many metrics, but it has, as you can see from the chart, it's one of those things where cheap
How
things
did you catch a falling knife?
tend to get cheaper. Yes, exactly. And you just think it's turned a corner, and then, oh no, it hasn't. So you've had 2 days of tiny bounce. Not one for me, I have to
Brian
say.
Tuck has said in the chat, Australia has lithium. So that's an interesting one, because we were talking about the rare earths. So, but I don't know if you saw yesterday, or I think it might have been 2 days ago, Trump having a fallout with the ambassador to Australia.
No.
Ambassador to the US.
Really? What happened now?
Oh, it was just they were commenting, and the ambassador was there, and they referred to. I think he said, "Oh, you know, the ambassador's made some bad comments about you in the past." And Trump has said, "Oh, is he still in the post?" And he was sat there.
Oh no!
And then Trump just said, "Oh, I don't like you. I don't like you," or something.
I've got to watch this.
It was quite funny. Yeah.
Oh, okay.
It was just you know, vintage Trump.
Vintage Trump.
Yeah.
Classic moment. But
Hopefully that won't affect it too badly.
oh dear. But yes, rare earths. Another. If Australia can boost this is your key one, isn't it? Really, if it can really keep moving, and the US-China fallout continues. And there was an argument saying, obviously, sorry, I put the chart up and then I'm not talking about it. But yeah, look at that chart. Absolute storming run from the rare earth. Again, sort of. Oh, it's doubled from the lows in the past 6 months. So there we go. Yeah, chart off. There's an argument that says, though, of course, China moved too soon with this rare earth.
Yeah.
That they haven't yet quite achieved the sort of stranglehold on it that they wanted to. And obviously, you've got Besant talking about doing an Operation Warp Speed on rare earth production. Mm-hmm. So that could be Australia beneficiary for that one, really.
Definitely, yeah. Be interesting to see.
Good. What else have we got? Automakers looking at problems with the Dutch, Chinese. Yeah, because the Dutch have taken over this chip firm. And that has obviously gone down badly in Beijing. But is it a sign of more to come? Is it the sign of others likely to take control?
Well, I think people do want to onshore their production of these sort of vital tech goods. They don't want to be at the behest of a potentially belligerent or nation. So I think that's something, you know, we saw Taiwan make extensive use of pretty much since its history as being a sovereign state in its own regard, and that's why it built what it's called, you know, its Silicon Shield, where it essentially has built such a strong tech and chip industry so that they are almost uninvadable, because if someone were to invade Taiwan, you're basically limiting the supply of around 65% of the world's semiconductors.
Yeah, and that would be
a very clever way of doing it.
The economic ramifications is quite something.
Yeah, I wonder how many semiconductors are currently in this room.
There we go. So we are on the cusp of the opening bell. 2 or 3 minutes to go. Let's see if we can
edging lower or edging higher.
Wow. Let's see. We're expecting. I think we're expecting. What's the open from the FTSE 100? Opening at, well, not at record highs, but obviously another good day. A stormy trade of the week. And before how's my trade of the week on the DAX doing? There we go. We were long DAX from Monday. Had an absolutely storming day on Monday. Just a little bit of indecision creeping back in again here, but holding up nicely. So I'm still. I think my entry was about 24. Where were we Monday? Hang on. 24. I think roughly about 24.80. I think it was. We got it before it went absolutely storming. We might be about roughly flouting it so far, but the key thing is not been stopped out. So I'm happy with that one so far.
Always
Long the
how
DAX.
you know you're doing okay.
Yeah, so holding on quite nicely. Good. What else have we got moving this morning? What else is on the move?
Well, before we get to the opening bell, do you think this gold move is going to last?
We should do gold. That's a good one. Poor gold.
Gold!
Do you do it deliberately? Clearly.
Great song, that.
Well, as a fund manager who's seen something go like it has, how do you take it? What's your view on it?
Well, gold is an interesting thing because you can't actually really value it using traditional models, and it's used as a diversifier. So many fund managers, apart from a few that I know, will have gold in their portfolio more than maybe 5 to 6, maybe 10% at most. So it's been a really fantastic diversifier. The performance has been fantastic, but it's not got the growth aspects that the equities do. So it's in there to serve a specific purpose, which is done with, exceptionally well. But I think people knew that there was potential headwinds at that price. But I think if you're looking at where gold is likely to go in the future, I think there is some tailwinds with regards to geopolitical conflict, central bank buying, and also sticky inflation.
I think this is the key thing, isn't it? And just looking at silver, we have an absolute storm in that one.
Yeah.
And then it's come off again. And then
in August, I think the ratio the gold to silver price was something like 1 to 88, which is like the highest it's ever been since ancient Egypt. So, when they were comparing the prices.
Good nerdiness. So 50 seconds. Have you got your bell, Aaron? Are you going to ring the bell this morning?
Yes. LSE bell especially.
Oh, he's poised. Look at that. You just need a bigger bell. So there goes your FTSE on the open. Let's go to the hourly, see what we got in the immediate movement there. 95.50, just nudging that in the early part of the session. What have we got moving? Let's get my FTSE 100 list up. So what have we got moving? Our winners and losers this morning. So start with, and there we are at the top of the list. Endeavour Mining, gold, right at the top of the list, 2.8% and climbing in early trading. What else have we got, Aaron, this morning?
Oh, testing my eyesight here. We've got BA Systems up 0.43%. Experian up around 0.5%. Vodafone up also around 40.4%. M&G flat for the day. So yeah, we're looking at some interesting gains. But as you mentioned, Endeavour Mining really being the
top
big
of the list, 3%. I don't.
Yeah.
Do they have news this morning? The chat might know. I didn't see them on the list of RNSs, but I might have missed it in my early rush. And then on the downside, Antofagasta. Who's got an ex-dividend? You talk. I'll find
That's immediately what I was thinking. That's
Thursday. Must be dividend day. What have we got?
Well, Diageo's down. I'm a very unhappy shareholder.
So today, from the 100, you just have BAE. It's tiny 0.72 impact on that. And then also today on the FTSE 250, we have moonpig.com, Morgan's, TBC Bank, quite a few investment trusts, and Weatherspoons goes ex-div. How's Weatherspoons doing in early trading? Trading update coming through, 1.4% down, so not too bad on that front. So yes, those decliners this morning. Ashtead as well. I wonder what Ashtead's up. That's interesting.
Do you think that's a bit of profit taking from the trade that we've seen earlier in the week?
Were they up earlier in the week? I hadn't followed them as much.
I think they were up slightly.
Sort of a fallen angel, really, Ashtead. Wowzers. Definitely. St James's Place. Shouldn't make fun of rivals, down 3.5%. Numbers this morning from them. Also, Intercontinental layered numbers this morning, 1.4%. So that's a tough one on that front. Diageo continues to struggle. So there we are in.
That's been a very unhappy hold for myself.
Sorry?
That's been a very unhappy hold, Diageo, for myself.
Oh, have you got it yourself?
I do, yeah.
Oh, no. These things happen. Just trying to zoom out on my thing. What else have we got? Let's see what the DAX is doing in early trading. 24,194. Okay, that's quite good. Fantastic. The trader we continue to cling on. There we go. Sometimes I get it right, sometimes I don't. Good.
I have faith, Chris.
You have faith. It's not a question of faith, it's a question of expertise. Silver, I can't, now I've zoomed in, I can't zoom out again. I've suddenly made it so. What else have we got, Aaron, this morning? What else is moving? Oh, we managed to ruin that chart completely. Oh, let's talk about the pound. What have we got from sterling?
I mean, I think we've seen a little bit of dollar strength come back to the forefront. Be interesting to see what because a lot of that will be determined by interest rates and what our path looks like for that. So, yeah, I'm interested to see that if inflation comes in cooler in, let's say, the next print as well, will we see a weakening pound?
It's going to be the way it goes, isn't it? And it has been on that trajectory for months, hasn't it? Slowly weakening.
After a blistering run.
Yeah, because of dollar weakness.
Yeah,
not
because of pound strength. Yeah.
No, it's well. Should we be fair? Is that unfair? Probably not.
Yeah, maybe.
You're at the mercy of other factors beyond their own control. Is it just waiting for the budget? Is that the key question here?
Oh yeah.
If everyone just waiting to see what happens.
I think everyone I've spoken to about the budget is terrified. I think is the word.
Objective.
I think it. Look, I think
including Rachel Reeves.
I think that could be an interesting poll, I guess. I think look, people are worried about how high the tax rises are going to be and where they're going to target. I think that's the concern.
Doctors and lawyers, wasn't it, in the
Yes,
Times a couple of days
and
ago?
accountants.
And accountants.
Yeah.
Well, tax them, nobody knows. Who likes accountants? Yeah.
You know, I think the concern is whether they raid income tax, VAT, and national insurance. That would be a breach of their manifesto. And I think people are concerned about how that's going to go, because obviously we saw Labour, you know, begin to raid pensions with regards to inheritance tax, you know, making SIPs become part of estates, which had been a long-term financial planning tool, you know, to sort of mitigate your inheritance tax liability, which had been, you know, something which UK pensioners have cherished, being able to pass on SIPs to their beneficiaries tax-free. But that's now gone. Well, it's going to come into force in the next couple of years. But if they you know, did that in their first budget, how much further are they willing to go? Especially with such a strong majority, they're lagging in the polls. They don't have to call an election for another.
A majority, but they don't ever seem to have imposed that on the Labour Party. A fractious group of left-wingers, whatever.
Yeah. Yeah, the rise of reform, you know, drumming up, you know, a rivalry to Labour. And also, I guess you could say Greens and the Lib Dems are also getting...
Yes, and so the Greens and Lib Dems both polling about 15% when you've got Labour on 19. There's not much of a gap between the two of them.
Yeah, this next election, if there was an election tomorrow, it would be very interesting to see how that would go.
Interesting is the word. And then we've got the pound, or the euro against the pound, should we say euro sterling. Anything for you on which you prefer, being in UK or being in Europe as a fund manager?
Are you talking for the equity side?
Yeah.
Look, I think there's benefits of both. I think if you look at Europe, you had a massive fiscal deal come out at the beginning of the year, trillions of euros being spent on infrastructure and defence. And if that comes to fruition, we're likely to see many companies and the economies benefit from that. As we've mentioned about the UK, I think the concern is just the government are tied, and also the central bank, even though we've seen a little bit of data say, oh, they can cut rates, or, you know, people getting excited about cutting rates. I think that with the UK, there's the policymakers have their hands tied a little bit. So I think sentiment is probably brewing more towards European positivity rather than my nationality's, you know, my country's, you know, sentiment and positivity towards that.
Okay, so E-Stocks 50, Euro Stocks 50 over FTSE 100.
I mean, look, we build the portfolios for very much the long term. So we've got positions
It's like nailing jelly to a wall with a fund manager. It really is. No, carry on. I'm being mean.
Look, we need to have positions in all of them. There's different qualities of all the different indices. But look, at the moment, if you put a gun to my head and said, which would you rather buy, probably based on sentiment, Euro stock.
Fantastic.
I mean, thankfully, there's no weapons in here for Chris to use.
No, it's just physical threats later on. Or stocks. What's that up this morning, Gallery? BP up 3%. When was the last time you saw BP up 3%? I'm sure somebody will tell me. Rent-a-kill, there's your win of the day, though, 13%.
Wow.
Where's my BP? Where's BP?
That's the, you know, returns of a index in a year sometimes.
Yeah.
So
well, not this year.
No.
Quite down. BP 2.8%. There we go. And Shell. So good day for FTSE 100.
Yeah.
Pretty good time for FTSE 100.
Yeah, we are. As I've just criticised
sanctions
and said why we should buy European continental.
Timing is everything. Timing is absolutely everything.
But
good.
Look, we do have these chunky positions in the FTSE in our portfolio, so we'll definitely be benefiting from this rally.
Should be good to tune into Man versus Machine. Of course, you won't get the update from this morning's trading, will you? But there we go.
Yesterday.
And then just a last look at these winners on the FTSE 100s this morning. Here, Rent-a-kill clearly clearing out more pests over the course of the last 6 months. Up nearly 13%.
And the London Stock Exchange on the London Stock Exchange.
Well, I've got LSE, and they're doing. They've talk about them losing their way in recent years, but they seem to have.
I was speaking to a fund manager a couple of days ago about why we've seen. I mean, we've seen a little bit of a revival in listings, but I mean, compared to America, nothing. And they're just basically saying, you know, if the government or policymakers got rid of the stamp duty on UK trades, UK equities, then the LSE would be a huge beneficiary of that, and we'd see more liquidity in the market and more companies want to list here and maybe higher valuations. But that's just an opinion of another in the industry.
Yeah, the concerns about the deals we made to buy things like Refinitiv, and it's costing them a lot of money, so they've definitely been clobbered. shares wiped out from January. But maybe there's signs of recovery in there. MACD, there's a weekly chart, some MACD crossover there. First one we've seen in months. That's a positive sign at least. So there we go. I speak as a shareholder. Long-term shareholder on that one. So we'll just have to see what happens on that one. And then what else? The last ones we've got to finish off with. So let's see, Endeavour Mining.
Let's see if there's any I hold there, which I can talk about as a shareholder.
No, she's talking about, but Rich does it all the time. It's fine.
Rolls-Royce is one I own, which has been fantastic. I mean, that's up 1.2% on the day.
There we go. So there are your... Don't forget your feedback in the poll, please, on the upcoming UK budget. Are you terrified? Think you'll be okay? The Breakdown Manifesto. Gosh, this is an involved poll, isn't it?
Basically,
options.
3 of the answers are the same. So
I'd like to vote for all 3 of them, please.
It's basically a scale of how bad it will be.
Yeah, I think we need to refer that one to who looks after polling in this country? Is it Ofcom?
Yeah.
Yeah, we'll need to refer that one to Ofcom, I think, this poll.
I mean, only 31 people, but I think that's represents a big swathe of the country's sentiment, to be honest.
Including, as I say, including the Labour Party, I think, terrified of what she's going to do to pull out of her hat. Good. I think that is the end of the session. Thank you for joining us. Thank you, Aaron, for stepping in. It's been much appreciated. I've been stuck here by myself and nobody wants that. We go on to Guess the Chart. It is a US stock, I'm told, in the gallery. So there you go. Get your guesses in now.
The chart, she whispers. But does she tell the truth? Step by step, I trace your line. A flicker red, a candle fine. You lead me up, you pull me down. You wear a bull's face, then turn around. Guess the chart, mi amor. Is it pain or is it profit I'm dancing for? With every tick I lose control. Your side raised glance devours my soul. Producer Phil plays coy. He shrugs while Rich is hedging all his plugs. But Ange, she sees, she knows the game. She whispered short, then lit the flame. A wick, a gap, a silent fall, a fib retracement, or none at all. The RSI is on the brink, but I can't move. I dare not blink. Guess the chart, mi amor. Is it pain or is it profit I'm dancing for? With every tick I lose control. Your sideways glance devours my soul. Guess the chart, take the lead. It's love or ruin in every feed. No safety net, no promised land, just broken dreams in a trader's hand. And when the candles fade to black, I'll wait for you to pull me back. A tango cruel, a chart, a chance, forever locked in this deadly dance.
Hello everyone, welcome back to Man vs Machine. I'm Aaron Bright, as you probably are aware from earlier, and I'm joined now by Martin Harris, who's replaced Chris today from today's earlier session and is our regular co-host on Man vs Machine. How are you today?
Yeah, good, thanks. And you? How did the show go?
Yeah, it's good fun. Always good to chat through macro and markets with Chris. But what was the chart? That is the question.
That is the question. What was the chart?
It was Ford. Jugger got it. I did not get that personally. So, yeah, makes sense. Been quite a volatile ride for Ford.
I think one of the positives is that for new clients of IG, if they've been following, but if you start a new account at IG, first trade, share dealing, you get free stocks.
Yes.
Up until now, it's only been UK stocks. In the future, we're going to start doing US stocks, and Ford is on that list.
I guess watch this space. We'll see what happens with that. Right, now we're moving on to Man vs Machine, which is our challenge where myself and Martin are up against AI in terms of portfolio construction. So very, very quick run through of the rules. We ask it to build a portfolio and to make changes. We ask it to run a macro summary, and then we based on that macro summary, we ask AI to make changes to the portfolio. There are some constraints there. I'm sure many of you will be aware of them now, but we just try and make it as realistic as possible in terms of UK retail investor behavior. This is what AI is holding at the moment. We did a few changes last week. Well, AI did, not us. Reducing some of that core MSCI World holding by 2%, increasing emerging market, decreasing cash, and adding also a little bit to gold. So it'll be quite interesting to see, because we obviously had that big trade downwards in gold on Tuesday. You know, obviously poor timing from AI.
Yeah, unfortunate poor timing for AI. Also, that reduction in that cash position. So AI taking a much more aggressive portfolio than we have at the moment. Starting to, you know, last week we saw that AI was leading the pack. Any kind of large market correction, AI is going to suffer through that, particularly that 18% position in defense stocks.
Definitely. And then, you know, this is our portfolio that we have constructed. I guess we've kept it fairly classic with some interesting additions. You know, we've got classic geographical ETFs there, like the S&P 500, the NASDAQ, FTSE, Europe ex UK. But we've got things like healthcare innovation, which is your brainchild.
Yeah, we'll say it's my brainchild. Really what we're looking for there is we've got a sector that has been beaten down. You still have some quality businesses within that. By taking the innovation ETF, we avoid the insurers and the hospital builders. And by doing that, you dodge a lot of the pressure from Donald Trump. So he is putting pressure on insurance firms, on pharmaceutical companies, and on hospital groups to bring prices down. The tech side of things so far unscathed.
Yeah.
So that was the play there.
Yeah, absolutely. And I think what you're all probably keen to find out is how have we done this week? Well, we've done quite well, I would say, outperforming the benchmark and AI. And AI actually had a down week this week.
All right.
And I think
getting somewhere.
I think this is down to I know you like to pick on me for using this word, but down to AI's idiosyncrasies.
Bingo.
Yeah, exactly.
Idiosyncrasies, yeah, absolutely.
You know, AI has got some very concentrated positions in certain areas, and when they do well, they do well. When they do badly, they do badly, and that's what's happened.
Yeah, there you go. All right, so we've got a 0.8% differential between us.
Absolutely, yeah. And then to put that into the context of the whole experiment so far, I would say pretty neck and neck now. You can see we've had a slight positive uptick. AI's had that little wobble downwards. Still both outperforming the benchmark, but you know, I mean, we're getting there. It's this, you know, if I was a fund manager and I was reviewing these two funds, I'd say not a huge amount of difference between it.
Yeah, look, so more volatility that we can see in that AI portfolio. Still ahead of us, we've got, what's that, 0.7% differential. If we can make that up, then we can get back ahead. But yeah, AI has been pulling ahead since late September. We can sort of see on the chart there between 17th and 24th of September was the last time the human portfolio was ahead. So keen to see whether we can remain defensive. So by not trying to chase AI, whether we can get ahead. And I think any market pullbacks at this point are supportive of our
Yeah,
portfolio.
that's the thing, and we were saying this yesterday. If we've got about an excess of 15% in cash, if we decide to deploy that now and we get a correction, then we're almost going to double down on underperforming. Even though the underperformance is fairly negligible at this juncture, AI's got most of its assets in equities, gold, whatnot. So yeah, much more invested than we are. And in terms of why the performance was so skewed over the week, it's quite clear when you see this chart. We can see that the healthcare ETF did really well. We can see that many of AI's holdings had a poorer week with regards to that. Anything that catches your eye here?
So I think that iShares Healthcare Innovation ETF leading the pack. So getting some return on that pick, still a small percentage of the portfolio, 3% of the portfolio there. So in terms of just the actual contribution, still relatively low. That physical gold ETC, the only negative position in the human portfolio. Again, this is on the back of this, although gold has now rallied all-time highs, we've had a really short-term sort of pullback there.
Well, there's so many memes about it saying, gold, because now it's still over 4,000, but it was obviously 4,200, and there are memes about people being delighted it was 4,000 in August, but now like devastated it's 4,000 now because you've had that sort of 6-7% pullback.
Yeah, in a really short space of time.
Yeah.
Next Era Energy at the bottom. That's been one of the at the bottom of the AI portfolio.
I'm going to say a word.
So before you say the word, that's been one of the outstanding performers for the AI portfolio. That's its #1 driver for returns so far. And so a lot of that outperformance that we're seeing is coming from Next Era Energy. A lot of tailwinds into that stock. There have been some supportive changes in regulations due to Donald Trump around energy companies in the States. So supportive for Next Era.
Yeah.
But
idiosyncrasy.
That's
the thing. That's what it boils down to, and you can see that with some of the single stock names. So if I take the defense ETF for example, that's up 1% on the week, and that's got a lot of tech names. It's much more diversified. But then you look at BAE Systems and Lockheed, they're down between 1.5% to 2% each. So that's when and why we added the VanEck defense ETF rather than just a bundle of defense stocks like AI, because you do get more diversification in that, and it's shown that when stocks have a little bit of a pullback, if you're in a basket of more than a couple of hundred individual names held within that ETF, there's more diversification within a sector.
Sure. I think one of the things that we are seeing with that VanEck defense ETF, and we saw last week when it was down and the defense
stocks, a lot of tech in there.
Yeah. It has the likes of Palantir and its top 10 holdings, so a company that has its earnings drawn from other defense companies but is not classified as a defense
stock. Diversification within the sector.
Yeah, and so you do get some divergence between what we would say is a pure play in a combo of BAE Systems and Lockheed against
the argument for that is you then don't necessarily get the same amount of volatility that you do get from the single stock. So it just depends on whether you believe that company has got really good potential and you're really buying into what that company is doing, or whether you just like the theme and the ecosystem of that theme.
Yeah, it's a reminder for a lot of investors to do some research on the ETFs that you hold. And because what you can end up doing is that if we held ETFs that typically lean towards technology stocks, and then we also hold technology-based ETFs, you then become really overweight in technology. And you think that, I've got multiple different ETFs, but actually in the underlying, you're holding a lot of tech.
Yeah, I remember once when I was working for a different company, we wanted some timber exposure in one of our ESG portfolios, and the diversification you got from that wasn't just sort of wood and forestry companies. You even got toilet paper companies, because that is still in the timber ecosystem, because it still comes from wood. So you wouldn't think, toilet paper is related to timber, but it is. So that was the diversity of the ecosystem, like you have a tech company in a defense ETF.
Yeah, no, I'm not going to talk about how I think toilet paper is related to timber, but third quarter earnings reporting period is now in full swing. So what we are expecting at the moment is that Q3 earnings per share now forecast to rise 8%, according to Bloomberg. That's against 6.9% at the end of last quarter. So financials at the moment are looking quite positive. So we've got a very supportive earnings environment. markets stretched in terms of valuations, reaching regular all-time highs, but continuing to show support. And so a lot of investors are starting to get a bit sort of twitchy at these levels. Anything in these portfolios that you would be looking to change at this point?
Look, at this moment with the human one, I'm quite happy with our positioning. I'm waiting to deploy some of the cash because, you know, I think if you're looking at an equity portfolio, I mean, we started it as an experiment to have 20% of dry powder, but like over the longer term, that's going to underperform equity markets. So I think it's just a case of finding an attractive entry point and finding an area with good sentiment where we can add that cash to. But I think in terms of the general diversification and the message that those positions that we have is quite exciting.
Got you. Should we get the AI in?
Yes, I think we should. ChatGPT, AI, how are you doing? How do you think things are going?
Portfolio continuing to perform well relative to both the human portfolio and the benchmark. The AI mix, diversified across global equities, defense, healthcare, and infrastructure, remains steady and balanced. Its built-in defensives like gold and short-duration bonds continue to provide stability as markets digest mixed signals from inflation and policy expectations. The human portfolio, meanwhile, is still more concentrated in US and UK large caps, with a heavier tilt toward technology and energy. That focus has rewarded recent strength in big tech, but it also leaves more exposure to valuation pressures if sentiment shifts. Since the start of the challenge, my line of performance has held consistently above the benchmark and narrowly ahead of the human portfolio, showing that steady allocation and discipline continue to work. On performance drivers, defense and healthcare remain reliable contributors, while exposure to infrastructure and energy offers inflation protection. Cash and bonds continue to act as a buffer in moments of volatility. Zooming out, UK markets are cautiously optimistic. Inflation is easing and rate cut expectations are building, but growth remains soft and fiscal uncertainty ahead of the election is keeping yields sticky. Investors are rotating selectively, favoring quality and income, rather than chasing risk. Given all that, I see no need for changes this week. The portfolio remains diversified, balanced, and well-positioned for long-term stability.
Interesting stuff there. And this is kind of more of a written summary of what AI has been up to this week. So it talks about concerns over, potential inflation in the UK and valuations being elevated, but then it sort of mentions that it's diversified in its equity sleeve to sort of mitigate that threat. I mean, and I think that's kind of the way we're feeling towards markets. And we've got quite an interesting question here, which we can tackle from Court Short. With Rachel Reeves' budget coming up, are you worried about the FTSE ETF in the short term? Look, there's definitely concerns about what's going to happen in the budget. And I was having this conversation with Chris in the earlier segment, is how highly are the British consumers going to be taxed, and where are those taxes going to come from? And, you know, that certainly could lead to a softer economy, which could affect some of the UK stocks, I would argue. So, you know, look, I think the dynamic for UK equities is positive with regards to the valuations that we're seeing, and we are almost seeing a little bit of a divergence between the returns and the actual state of the UK economy. But there's definitely elements of concern in the short term. Would you sort of agree with that?
Yeah, I think that being a little bit withdrawn from where UK politics are at the moment, I think the Labour Party will be looking to spread out where the taxes are coming from so that there isn't a single targeted group. I think they've got a challenge in going against their mandate pre-election that they weren't going to raise taxes. And so I think they're going to try and find multiple ways of putting in smaller changes to the existing tax system so that they can frame it in a positive way. In terms of the UK consumers, I think that there's a level where, because Labour maintaining spending and now going in for tax rises, who gets impacted by that matters, and that's where you'll see the consumption changes. So as long as there's still support, I think the grocers, the grocery stores, they'll still be they'll do well. Yeah,
staples are still likely to be better.
Yeah, I think are going to be well supported beneficiaries of a welfare state.
Still going to buy shower gel and toilet paper, harking back to that. Regardless, that they are staples. Now, there was a fund manager, James Thompson of Rathbones, who I remember saying in a he had a bad period during 2008 recession, and during future recessions, he prepared by buying waste management companies, because he said, you're still going to be taking your bins out even if you're in a bad fiscal situation or the economy is soft.
Yeah, absolutely.
So those sort of companies, the shower gels, the waste companies, they're still going to have fairly steady cash flows, one would expect.
Yeah, I think that the issue that you face when you start to look at, so the retailer often is able to stay supported, but if you then go into the individual names, you'll get a substitution. So people stop buying the branded goods and start substituting them for cheaper ones. And so, if you could be, in that case, almost like short Waitrose, long Lidl, that's maybe the trade, should there be enough sort of tax hikes.
So very quickly, let's move on to what ChatGPT has said. And yes, as you may have heard from its chat, it's not making any changes for now. It's quite happy with its diversification, and it believes that its portfolio is carefully constructed. I kind of agree with ChatGPT. Do you?
I thought what I noticed today was just how well it delivered this message. It's definitely improving. So I mean, this is a stock sort of OpenAI valued at under $500 billion. I think the entire market cap of the AI sector, non-listed, is believed to be about $1 trillion at this point. So
that includes like the likes of Anthropic, and I assume it probably won't include Copilot as part of Microsoft. Or,
I mean, yes. So including and you then add in the likes of what Twitter putting in as Grok.
Yeah.
So we're up against a $500 billion system at the moment, and we're only lagging it by 0.7%. Not terrible.
I'll take that at the moment.
I think economic updates. I think one of the things it spoke about were inflation. We've got central bank policy decisions coming up, all on the immediate horizon. FOMC primed to lower rates even without the benefit of key labour market data at the moment, with that government shutdown in the States. So we're also expecting another cut from the Bank of China, and ECB sets to be on hold. BOE, so they're monitoring CPI.
I think that they're not going to cut this year, personally, because we've still got 3.8% inflation, even though that's softer than expected. It's not. If I was a central bank governor, and that's just down the road from here, I wouldn't be too pleased with like 3.8% inflation. I mean, from where we were, it's better, but it's not an amazing figure. I'd rather 3.8% than 10%, obviously. But if you were a central bank governor, you probably wouldn't be happy if every year you were delivering 3.8% inflation.
Yeah, look, the kind of window of where the rate of inflation sits has now kind of
shifted a bit.
Shifted completely, and the political decision to really bring inflation under control is not one that people want to swallow.
No, we do have to discuss the poll. I've been told by a producer.
The poll. What was the poll?
Thoughts on the upcoming UK budget, which is. And the answers were, because I mentioned to Chris that I was slightly terrified of it. So that was one of the answers. So the responses are, they will break their manifesto, 42%. 37% of people are terrified of the potential tax rises.
So we add 42 plus the 37. Those are people they're going to break the manifesto.
Yeah, pretty much. 13% say only time will tell, and only 8% of people believe will be okay. So I think I need a dose of their optimism. But look, it's definitely an interesting time for the UK, and how bad the budget's going to be, because it's widely forecasted that there's going to be some tax rises. And as you were saying earlier, Martin, it just depends where they come from and who they target.
No, exactly. I don't know enough about UK budget.
I've got Phil saying that Rachel Reeves is specifically targeting me, so I hope he's wrong. And fund managers.
When Rachel Reeves would definitely target you.
Okay. Right, well, I think that's all we've got time for this week. We've got a couple of reruns. Julian Wheeler from Tuesday coming up next, and Sammy Ellard King afterwards. So thank you very much for tuning in, and we'll see you next time.
Welcome back, everybody. It's Julian Wheeler here with me to discuss all things, that have been in the news for the last couple of weeks, because we've got plenty to talk about.
We got a lot to talk about, yeah. So last time I was on, it was just the day before, and I said nothing's happening, nothing's untoward.
Yeah. What could possibly go wrong?
What could possibly go wrong? And I go back to my desk, and about lunchtime that day, this is Wednesday, 2 weeks ago, Jefferies, the investment bank, puts out this announcement that the First Brands bankruptcy that's had already had a little bit of publicity, but not very much.
Yes, but it kind of went by without us really focusing.
I mean, companies go bust. This is part of the capital cycle.
Yeah.
But what Jeffrey said was, we've got $714 million exposure in outstanding loans. And you go, right? And then you find out the fund in which is invested, that's 24% of their assets. So people went, Now, Morgan Stanley came out immediately and said, don't worry, the loss will be manageable, no problem. Stock didn't really react. That's what happened later in the day. Later in the day, we suddenly found at lunchtime, BlackRock said, we'd like our money out of the fund.
Oh, I didn't know that. Right, let's get the chart up then, guys. So there's Jefferies over the last, that goes back to the
goes back to the earnings.
7th of October there.
Okay, so that's when we had the dislocation, right? And that was the news that it wasn't so much they were making a loss, but if the Titanic's hit the iceberg, you want first lifeboat. When there's a run on the bank, you want to be at the front of the queue.
Right.
Now, I'm not saying there's a run on the bank here,
Yeah.
but it was the fact that you get a brokerage say, no, don't worry, manageable, but the actual investors say, we'd like out. And the following day, Morgan Stanley Asset Management said, we'd like our money out as well. So suddenly, there was a case.
See, that gets smelly, doesn't it? The fact that Morgan Stanley are saying, fine, by the way, we do have exposure to this.
Yeah, exactly. So what you suddenly realized was that, then it was followed up the following week. Jamie Dimon, CEO of JP Morgan, on his call, he did the old, well, there's always more than one cockroach in the kitchen sort of story.
That's the famous quote of last week, isn't it?
Yeah, that's right.
Yeah.
To which one of the private equity CEOs came back and said, well, I don't know what he's talking about. We're absolutely fine. Maybe he's saying within JP Morgan, there are plenty of cockroaches, dig back. So you've got this very much public versus private trade-off. And they are, after all, competitors. And I think, the market is the ultimate arbiter. If you look at the last 12 months and say Apollo, who are the most exposed to private credit, if you look at the chart of Apollo and say Blackstone, the two biggest, and you compare those to JP Morgan and say Goldman Sachs,
very different story, isn't it?
It is plus 40% to one lot, minus 10 for the other. So the market's saying private equity, there's either a problem or the good times are over, or at least, it's not going to be as good as it was.
Yeah.
And, when you look at a top or a potential top, our government wants us now all to put money in our pensions into private equity. Well, why not 15 years ago when this was all good?
Yeah.
We're all going to be piled into private equity now. No thanks. I'd have liked to have been in private equity when it had the advantage. Because what's going to happen now is that we're going to roll back the regulations on the Wall Street banks. You're going to see the regulations rolled back and lending standards will be loosened. Mm-hmm. Because basically, and now coming on to the banks, you've seen that these banks, they're normally their own worst enemies. And they, if they, can find something to trip over, they will find it.
Yeah, they try their hardest.
Yeah, they try their hardest. But they have been prevented since 2008.
Yeah.
The regulations that were put in the wave of the bailout and TARP was so onerous. That's what was the growth of private credit. It stepped in because the banks couldn't lend.
Right, okay.
And now that's sort of unfair. And from JP Morgan downwards, they've clearly led a charge. And you're going to see, I'm pretty sure that's going to come out probably by the end of the year or early next, there will be far looser lending standards. Tier 1 capital requirements will come down. The whole Basel II, Basel III, I don't know what we're up to now, will be repealed or rolled back, certainly. That's what they're going to do. I'm sure about it. And that's why you're seeing the underperformance of private credit.
Well, I would imagine Zion's Bank could probably do with a little less regulation because, that was one of the victims of last week, I guess.
Well, you see, what Zion's, this is very interesting. So Zion's reported last night, and having gone to the market last week and said, we have a 50 million, not First Brands, something else, Like we've sort of looked through our book and suddenly, oh, there's a 50 million bad loss we think may be fraud. And you sort of wonder, well, why did they say it last week? I mean, how long has this been known about?
Yeah.
Or how long has this been? The coincidence seems too much. However, when Zions reported last night, their credit losses were totally manageable within the realms of what you'd expect. So the stock, having gone up again, went up again after hours. So, you know, it's exactly the thing. It's
And that
not
is
the banks.
part of the regulations, though, isn't it? Because if these things aren't disclosed immediately, the CEO risks going to jail.
That's right.
So there's no way that they're...
The banks are not going to be, you know, and the market sort of aggressively sold the banks down on this sort of news yesterday. But they're fighting the last war. You know, this would have been the right thing to do 17 years ago.
Yeah.
But not now. So I think the banks are okay.
Okay. And yeah, certainly the regionals have recovered somewhat.
Yeah, there's going to be a little bit of, you know, show me the money, as it were. I want to see it. But Zions results last night, slightly wonder why they bothered to make that disclosure. So I can't answer that one. But I mean, why they made a big point of making a disclosure, them and one called Western Alliance Bank. We'll see what they say. But as I say, no, more likely holding the parcel when the bomb goes off is going to be insurance.
When the bomb goes off,
well, it is a parcel.
Metaphors
well,
there.
I have lots of them, but you know, the old pass the parcel, and you don't want to be holding it.
Yeah.
And normally it's good old pension fund insurer who's, you know, at the end of this line and who says, "Oh yes, I have this, do I?" You know, back to Jefferies. Their role in all this is the one that's still open to question.
And so Rich Handler spends a lot of time on social media, right? So as the CEO of a bank, should you be commenting on every Instagram post, you know, from these overhead on Wall Street and things like that? Or should you be making sure that one of your funds hasn't got 25% exposure?
I would say so. I mean, at what point is, you know, let's leave aside that anything untoward has happened. But on a risk management basis, you know, if we had a fund within Shard that had 25% exposure to one credit name, we do have a credit fund. Shard Credit Partners we do have. So I'm familiar with private credit because we have one, and it has an absolute, you know, 10% is a maximum, and that's a sort of standard rule.
Yeah,
I think across the industry. So to find this one has 25%, and then you find that they're also arranging the loans. It's I don't know what's the term, shabby, maybe. You know, anyway, we'll see. So unlike Zions Bank, which has now got its entire loss back, Jefferies is still trading below the point at which this revelation was made. So we'll see. We'll see.
Yeah. I noticed BNP got absolutely smashed yesterday. Was that something to do with, because we know that, you know, their total exposure as a bank, not necessarily to this loan book, but they've got a big balance sheet, don't they?
There's always, every cycle normally brings down one financial institution, at least. Credit Suisse was the last one.
God bless its soul.
There we go. Is it BNP? I don't know. I haven't looked at that. Can't comment. But that, you know, again, what's the market telling you? Market didn't like that.
Yeah.
Didn't like that at all. But even I saw Vietnam, the entire Vietnam stock market dropped over 5% yesterday.
Right.
They said because of credit issues.
Okay.
So we know that when there's easy, cheap money and it's a happy game, it encourages risk taking.
That's it. And then you have very aggressive rate increases. They stay higher for longer than people think they're going to. And bit by bit, that eats away at these institutions and the credit worthiness.
Well, the credit, they've all been, and then what happens is that more money and more money comes in, right? So they've raised more and more of these funds. So what do you do with this money? You've got to deploy it, right? I mean, you know, if I give you something, it's not to, you know, remember the parable, Jesus of the servant who just went and dug a hole and put his in the ground and said, well, I didn't know how to do it. He said, thou wicked and faithless servant, you know, give it to the man who made most. Very capitalist, Jesus, back in the day.
He was.
He was.
Spent 30% of his time talking about finance.
I know, he did, you see. So the point is that if you get money, you've got to deploy it. right? You earn fees on it when you deploy it. That's the first thing.
Yeah.
So that slightly pushes you to do something. The first brands thing, if there are more like that, we really do have a problem, because that's where they're saying, look, they've made loans and they use the collateral of invoices to then go and get another loan. So they're double and triple counting.
So in invoice financing, the first time I heard about this was, I think, 2017 or 18. And my friend was offered a job for a US firm that was trying to expand in Europe. The returns were just too good to be true.
Well, there you go.
Absolutely. Like, you know, we were like, how do we invest? But there was a minimum, I think, 250,000 it was to invest in this fund.
If they're too good to be true, they are.
Sooner or later.
Well, you know, it's this is Ponzi 101. You make something attractive to bring in another, and the second person in pays the first, the third pays the second, and so on. This game is as old as finance.
And accounting scandals, fraud, loan book problems, that is late cycle, isn't it?
Always, always. It's when you've had good times, you've made money, and now you go, what do I do next?
Yeah.
Now, what a lot of American companies are doing, which is why the American market continues to go up and why I keep saying you won't have this crash, is most American companies make money and they just buy back their stock.
Yeah.
I mean, they keep retiring across the market about $1 trillion a year. Well, that's a pretty good buyer in the market.
Yeah.
So that with retail, who says, buy the dip, buy the dip, buy the dip. I keep saying this is why the market doesn't go down.
Yeah. Right, we're going into results season.
Yes.
I would imagine, I can't imagine anything there putting the market down. We'll probably see tech go higher yet again. But what are you focused on for earnings?
Well, we talked about Netflix a couple of weeks ago. They're tonight.
Yeah.
They'll be good. They should be good. They should be good. But it's not so much about the results. It's about what they're showing. They'll talk about K-pop Demon Hunters.
Yes, of course.
Well, Funko's been a disaster for now. There are various reasons. I know. I have to own up to the bad one at the moment.
Well, but we looked at it, wasn't it? And it's because it's not even coming out.
It's not coming out this side of Christmas, and that's the problem.
Oh, is it now this side of Christmas?
Yes, and that's why the stock's gone back down.
All right, okay.
But we still think with the stock here at $3, it's trading as if it's going bust.
Mm-hmm.
And I don't think it will go bust because I think they will not allow it to go bust. I think Netflix won't buy it, but they've got a Netflix man in there. They do not want this thing to go down.
So that's something to watch on tonight's call. But what about numbers coming up in the next week or two?
Right. Well, we've got Tesla this week. Can't comment on that. Intel will be more interesting on Thursday.
A real stock.
Now, I've talked about Intel before with you a few months ago. The US government's invested. The stock has moved massively.
Yeah.
It's 50% up since the US government put its money in. So we have to, and they're not going to have spectacular earnings. Right?
No, nothing's changed.
I would be, personally, I'd be taking profits on that.
Yeah.
Because the risk reward at 38, if you were in the low 20s or something, right, you've made a huge move. So it'll be about what we have, what's progress, what's coming. And I can't see that they can do enough to take the stock up versus what might put the stock back down. Now, if it goes back down to, say, low 30s.
Yeah, 32s.
Something like that, a big buyer. For long term, Intel's back in the game.
Yeah.
It really is back in the game. And the real kicker could come. This is one of my worries. I've got three worries in the market. One of them is obviously the China and Trump trade deal, which goes backwards and forwards, and but it's always there as an overhang.
Are we getting a resolution this week?
Well, we're supposed to, but I mean, do we? I've no idea. I mean, your guess is as good as mine. But here's what's the worry. It's a plus for Intel and a negative for TSMC. Trump said that part of the thing they'd be discussing would be Taiwan sovereignty.
Wow.
He said that to reporters. I don't know why the market didn't pick up on this. Yesterday, when he was talking to the Daily Reporter thing, and he said, I don't like what they're doing with fentanyl, don't like what they're doing with rare earth, they're playing the rare earth game with us. But off that soundbite, he also said, I'm sure the subject of Taiwan will come up.
Right, okay.
Well, if he says anything that is negative for Taiwan, that's not good.
Yeah.
That's not very good. Just for the market perception, I'm just saying. But anything that's negative for Taiwan is probably positive for Intel.
Yeah, but there's nothing that can be said there, you know, there's no way that Xi and Trump could ever have a discussion that has a solution on that.
No, what the Chinese want is they want the American wording of their recognition of Taiwan changed. It's something like, at the moment, they recognize the fact that they are an independent state, or they don't wish to. There's a certain wording that's currently used under US standard policy, and he wants to change it to something that's, shall we say, more negative.
Right, okay. And less in
favor.
Defend them.
Yes. Yeah. And if the market decided that that was for real, there's going to be a problem.
Yeah.
So other earnings. Sorry, I wanted to talk about one that's
there's Alcoa numbers tomorrow night. You've got some thoughts on Alcoa, but not necessarily
not the earnings.
For the earnings, yeah.
No. Okay. Alcoa is my new sort of stealth AI play.
Oh, right. Okay.
Okay. Because look, metals have been up everywhere.
Yeah.
All the precious metals are through the roof. Alcoa is the old, original, was a member of the Dow Jones, aluminium. Aluminium's been in a bad place. Two main drivers of aluminium demand, auto, so cars and planes. Right. Now, as you know, Boeing haven't been making as many planes as they should. So that's not very good. Mm-hmm. Airbus are maxed out, so you can't get any growth there. And cars have been terrible. I mean, look at the German car companies. They've been absolutely shocking.
Yeah.
So the demand picture isn't great. And Alcoa's numbers, they're only going to make probably a couple of cents earnings tomorrow. Okay, so we really aren't in this for the earnings. No. What we're in it for is an asset play.
Okay.
Here's what happens. Alcoa has built up, obviously, over time, its plants. It's been in business for, since aluminium started. Yeah. Right? And back in the 1940s, 50s, 60s was when they were really expanding. They built plants all over the place.
Busy then.
They're busy. So what they've now done is they've decommissioned quite a lot of sites.
Okay.
One of which is in Australia.
Right.
Major one. And if you can, I don't know if you can show me. There we go.
Almost as if we planned.
Almost as if we by magic. Right. You're looking at Melbourne there. So Melbourne's in the top right-hand corner, as you see. There you go. But I don't want you to look at Melbourne. I want you to now come down the coast and look at Geelong. There we go. Now, Geelong, you see, is basically a suburb of Melbourne. Nice coastal bit. Now then, the bit that matters is that little horn bit sticking up right in the middle there, called Point Henry. Okay. There we go. And we zoom in there. Boom. Now, how about that for a little beach frontage real estate?
Beautiful.
Lovely. But there are no houses. That is Alcoa's aluminium smelter.
Wow.
Or was. Or was.
It's just been decommissioned.
Not just, because it takes time. It was decommissioned in 2014.
Okay.
Took 10 years to clean it up, remediation. Last summer, they asked for proposals for what to do with that.
And that's a lot of land.
I'll tell you how much that is. Do you want to think in hectares or acres?
Go on, you tell me in acres.
Acres, 1,300 acres.
Right, okay.
1,300 acres. Look at that. Look at it on the left there. That's Geelong. There's the city. Yeah. How about, would you like to live on the nice little bit out in the bay there? Okay, wow. Come around there. Right, 1,300 acres of that. Now, I've done some work with people who are developers and stuff. What's that worth? I'll give you the nutshell. About 500 million.
Okay.
We reckon that's worth $500 million if they sell it. And they've been asking for proposals. Now, when you go tap, 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 Alcoa's market cap.
That's exactly what I was tapping.
Is 10 billion.
It's 10 billion. 5%.
So that's 5% of the company right there. Okay, right there. Now, that's just the start. Okay, that's just the start. Now I'll be quicker. I'll speed up. Right, they have a place called Messina in New York. That's an existing aluminium plant.
Okay.
But they don't use all of it. Who do you think they've had in there for the last 7 years? A Bitcoin miner.
Of course they have, right?
Why would they have a Bitcoin miner at an aluminium plant? Because aluminium is the most power-intensive industrial process known to man.
Yeah.
When that Geelong plant you just saw there was operational, it was drawing 25% of the entire state of Victoria's electricity.
Wow.
Okay.
Okay.
For that aluminium plant.
Yeah.
Aluminium is basically solid electricity. Think of it like that. That's what it is, right? So what does that mean? If you're Alcoa, every plant you have has got to have a massive power supply.
Right beside
See where this is going?
Yeah.
So if you run that, you have been in business for years. You've got long-term power contracts with the utility supplier, with the grid. You understand that when the grid was built, it has to supply you first because you're the base load. When utilities talk about having a base load to sell to customers, they mean to Alcoa.
Right.
Or someone like them.
Yeah.
Massive industrial plant that's on 24 hours a day, we know guarantees us our take of our supply. There's our biggest, best customer.
Yeah.
So guess what? At Messina in New York, they've just done a new 10-year power deal. 10 years. They've signed that this summer. So 10 years of power guaranteed to them. Now, where are we going with this? That Bitcoin miner's lease comes up for renewal. Okay, Mr. Bitcoin miner, do you want to stay? Oh, do you know what? You're going to have to pay a bit more because we've got Oracle, Microsoft, Google,
Banging the door down.
Meta, Amazon saying, oh, could we put a data center just on the side of your aluminium plant? Oh, we could use your power. Oh, and it's already attached to the grid. So we won't have to wait for all that permitting from everywhere
Yeah.
else. Alcoa could be the power bottleneck unlocker for the data center industry, except it's on 9 times earnings.
And what would that do to the aluminium price?
Well, the aluminium price is already, now I get back to the fundamentals of aluminium.
Yeah.
We've also had a little benefit. There was a fire in somewhere called Oswego, I think, which is, can't remember exactly where it is.
Yeah.
Anyway, there's been a fire in America at something called Novelis Aluminium.
Okay.
This was last month,
Right.
taking it out. That aluminium plant is shut down.
And not coming back.
Not coming back till about middle of next year.
Okay.
Okay?
Right.
What does that produce? 40% of the auto-grade aluminium for the USA.
Wow.
Ford has suspended production of their cars because they can't get the aluminium. Force majeure been declared on all the contracts.
Okay.
Alcoa doesn't really have much spare capacity in the States, so it's been sending it in from Canada.
Right.
But Canada, thanks to Mr. Trump, has got massive tariffs.
Yes. Okay.
But the spot price of aluminium in the States has gone so high, it was even worth doing. There we go. So there's your, now that's the global price, right? But in the US,
Local one.
if there's a local price, it's much higher.
Right.
So it's even worth with the tariffs for Alcoa. Now, I think Trump might roll back those tariffs because this is a act of God type thing.
Yeah.
This wasn't the plan. So he might roll them back for the period until Novelis' plant comes back online,
Okay.
which would be 9 months, which would be great for Alcoa. But even if it isn't, they're the only game in town. They're the only game in town. So that's the aluminium itself. But the key thing is why and when, when's this going to happen? Not on these earnings. On the 30th of October.
There's
That's
a
week
catalyst.
tomorrow. They're having an analyst day.
Right.
The first one for 4 years.
Wow. Ooh, I like this story, Julian. I like this a lot.
So now the annoying thing is, ladies and gentlemen, it went up 8% yesterday.
What's
Alcoa went up 8% yesterday.
Right.
And it went up 8% yesterday following, I think, that crazy Cleveland Cliffs
Oh,
and everything else in metals, which went up madly, right, yesterday? Because there's one thing. So Cleveland Cliffs, you talk about a bubble in the market, rare earths, there's your bubble.
They said, oh, that rare earth thing, we might possibly.
Yeah. It's like, oh, there's a party going on. Yeah, we're there. We're on this one. They're a steel company. They make steel and they have mining operations to support their steel business.
Yeah.
They said there are indications there might be. Well, of course there might be. If the price goes high enough, you and I can have some rare earth probably in our garden.
Well, yeah, take me through what rare earths actually are.
Okay, rare earths are some lesser found individual memories. You need to really know your chemical periodic table to know the names of all these things. They all go under ridiculous names that I've never heard of, and nor have you, and I'm not going to try, right?
Yeah.
They occur in very small amounts, but you only need very small amounts. They do occur all over the place.
Okay.
It's just where are they concentrated enough to make it economically viable to mine them?
Right.
One of the reasons they're in China, though, it's not just because they're in China. They tend to occur along with other radioactive materials.
Okay.
They are an environmental nightmare.
Right.
If Cleveland Cliffs thinks it's going to start mining these things, I would get so far away from that stock, I wouldn't move. It went up 25% yesterday. That is the biggest sell. Right? That is where you're talking bubble. You know why? We just talked a little earlier about Trump and his deal with China, right? How about there's a deal with China? Okay, I lower my sort of level of recognition for Taiwan. I give you some AI chips. I'll give you the second, third generation.
Yeah.
You give me the rare earth stuff. That's
Okay,
what I want.
So that would then take the concerns around supply of rare earths out of the equation.
And all these US stocks that have gone up go crashing back down. I would stay so well clear of these things.
And what stocks in particular have
Oh, there's MP Materials, US Antimony, I think is another one. There's a few of them. I thought you guys will know. There you go, MP Material, he's one of them. There you go.
So there we go. It's gone from 23 to
Yeah.
82. Now, they have done a deal with the White House.
They have, but you know, they've done a deal, so's Intel done a deal with the White House, or the White House invested them.
True.
You have been paid. Don't be greedy.
What was the other one, sorry? MP Materials?
Something like US Antimony, I think it's called.
There we go. Boom.
There you go. There you go. This is the sort of stuff.
Yes, that looks a little bit like...
That's the sort of Everest type chart you want to get out before you get to Sherpa Tenzing's heights up the top there.
Yeah.
Get out.
Okay, so we want to look at these things if there is a broker deal between Trump and Xi, which so far there's always been in every single discussion with Trump.
There's always he basically rattles the tin. He's like the scaremonger. Yeah. You know, he's like a sort of pantomime villain. Oh, the bogeyman's coming. Oh, no, it's all right. You know, the good guy, the man in the white hat, turns up at the end. You know,
I'd say it worked with Europe though.
Worked with Europe, it did. But China plays poker better.
Yeah, they've got the cards and they made the cards in the first place.
Correct.
Thank you very much, as always. And we'll see you in a couple of weeks.
In a couple of weeks, yeah.
In a couple of weeks, brilliant. And by then
we'll have had a lot of big tech earnings, obviously, and we'll see where we are. I mean, I don't think there's going to be anything wrong with the earnings. It's whether the market has decided we've priced enough.
Which one would you be most comfortable owning out of Mag 7?
Oh, good
earnings.
Okay, I'm going to take a stab and go with previously, and this is annoying because I'm trying to back job here, I'd have said Google, because Google was the one in the sin bin. So I'm going to go for the one currently in the sin bin, Amazon.
Right, okay.
Because they think Amazon's cloud growth is slowing. I think it's going to reaccelerate.
Right. Oh my goodness, if that reaccelerates, that stock is...
That's why.
Forget the troubles yesterday.
Yeah, so I think that... So that's why I've got biggest bang for my buck on Amazon.
Welcome back, welcome back. So my good friend Sammy Eller-King here is usually the one who's doing the interviewing, but the tables have turned today, sir. Welcome to Trade Live with IG.
Thanks, Rich, man. I'm really happy to be here.
Yeah, it's great to have you involved. So those of you that don't know then, Sammy has been running the Money Gains podcast for 153 episodes, one of which I was very proud to be part of. And we got another one coming up on Monday.
Yeah.
How did you first start? How did you come up with the idea of podcasting?
Podcasting really, so for me, we have a content business. One of our streams is the podcast, and we like meeting people where they want to learn. So some people like listening, some people like reading, watching, and so we operate in all those spheres. So I'm a podcaster. I learn everything that I know off podcasts and shows like this or things that are online. I prefer listening rather than watching. I'll have it on in the background, but I'm very much on my headphones doing the dishes kind of thing, and I'll learn during those times. So that's why we did it, because also selfishly I meet great people, yourself one of them of course, and it's great for networking, but I also learn so much as well, which I wouldn't necessarily have perhaps ever even have thought about. So it's different people's perspectives which I can then put into our own content as well.
And I guess, because I mean, I think of you as the better Stephen Bartlett, basically. And take us through some of the guests that you've had on there.
Yeah, we've had Andrew Craig, so author of How to Own the World. Brilliant guest, always does extremely well. Good friend of ours, Michael Taylor from Shifting Shares. Hilarious episode, actually.
Yeah.
I love him.
He's got such a dry sense of humor, it's brilliant, isn't it?
You don't know it's coming with him. And then he just says something and I'm like, oh my God, that was hilarious. And then I laughed because I was so shocked at the way he delivered it. And he's great.
And that's a dream for, of course, your boss, Danielle, is in the house today, filming in the back behind the cameras. And that's, getting those cut downs is perfect for those kind of snapshots, isn't it?
Yeah, that's a big thing of what we do. We like sort of cutting the little clips up and taking little moments out, and that brings in new people into the show. And so it's just been great. Like we hit the top 3 UK business podcasts last week.
Wow.
Just insane. And so it's been one of them things. And podcasting's hard. Like it's like a hockey stick, like investing and compounding. It really is. It is exactly the same. It's almost identical to my own investment portfolio is the journey of the podcast.
Right. And that's because word of mouth just accelerates the number of listeners.
Yeah, and it's just really hard to grow. But then once you get that breakout episode or someone like shares it and it goes viral, then you can really sort of take off. And if you keep doing that, eventually you get a big hit. And that's what happened. We had quite a big viral clip go, and the listenership just flew up almost 3x overnight. It was crazy.
Wow. And so who was the viral clip then?
Andrew Craig.
It was, yeah, because he's, so take us a bit, for those of you that haven't heard of Andrew Craig, a fantastic book that you might want to order. But yeah, take us through Andrew's, what you learned from him on that pod.
Yeah, so it's really interesting. Obviously, we were unpacking Rachel Reeves in the budget and the impact on working people, like vicariously, essentially. Like it's not obvious that it was impacting working people, but when he laid it out, it was quite obvious it was. And I was just really enamored by his perspective on things. And then one of the ideas that he had, obviously, as we know, the UK stock market has had a real problem with IPOs and money flowing through it recently. And so he had an idea of getting money into small cap businesses because small caps, medium caps are finding it very difficult to raise.
Love the idea.
So he had the idea of £5,000 for every child when born invested only into small UK cap businesses. And you can add to it kind of like a junior SIP, similar to the Gordon Brown's Child Trust that was out in the 90s.
Oh, I didn't know about that one.
They gave £500, but it was poorly invested and it wasn't in the right places. So some people actually ended up with less than what they put in on minus fees, which is just wild, right? So that is really important.
Because it was ring fest, wasn't it? So it was
exactly.
So £5,000, even if it's 2.5, but invested in UK small and mid caps.
Yeah.
And when the child retires at 55, then it was estimated it would be £1 million, right?
Yeah, £1 million for each child. And the incredible thing was it's actually only £3 billion for the government to fund a year, potentially even less, which they're spending on 1.2 trillion at the moment. So it's a very small amount.
Yeah.
And then that compounds. So actually there's more money going into UK business, and it's just such a great way to fuel the economy. Yeah.
This is the great thing. And then, of course, we all know there's no way that we're getting a state pension kicking in at 67 years old. It's going to be 75 by the time we get to that age. Sammy will obviously get there before I do. But let's touch on the irony of the name. So you've got 3 sets of businesses. There's the Up the Gains, which is the content. There's the Money Gains, and then there's a new one, the Gains app.
Yeah.
But the irony being that you haven't been gaining yourself, have you? So Sammy was a big old chap. And how much weight have you lost, Sammy?
Yeah, 35 kilos now.
35 kilos. I want to lose about 3.5 would be a good start, to be honest.
Yeah.
But that just shows the discipline that you're prepared to put in, not just in those businesses. And, so you deserve everything you're getting there. But it's the same discipline that you can put in to something like weight loss. Is your stock portfolio as disciplined?
The stock portfolio is even more disciplined.
Right.
Even more disciplined. Like, with the weight journey, it takes a long time and you do have the occasional cheat days. But I don't tend to cheat with my investments as such. Okay. So it's crazy. One thing for me is the old cliche of wealth is health and all of that, but when you're building something and you're working extremely hard on, say, a business or stock investment portfolio or anything like that, and it takes a lot of time, there's always some level of sacrifice which you have to take. And if you're putting a lot of time into your investment research, it's going to impact the amount of time you spend with friends or family or whatever that might be. And the thing for me was I gave up my health a little bit to build the businesses. And then I'm on camera quite a lot.
Yeah.
So you start noticing it. And I was like, I've always been quite a healthy and fit sort of person. And so I was like, something's got to change. But it took 18 months. So it took a while.
And the first 6 months you were going through the gym and thinking you could do it that way and exercise, but it's diet, isn't it?
It's diet. That you always think like, oh, it's so cliche again, it's boring, like listening to these fitness influencers, like 90% of it's your diet. You're like, oh yeah, whatever, I'll out-train it, 100% will. And you won't. And so as soon as I got my diet dialed in, actually weirdly, like that happened rapidly from that point. And also you feel like really energetic, you sleep better. And it's crazy because the moment that I started doing the diet thing, it's almost like at the same time, the business started really kicking on as well.
Because it's not a coincidence, is it?
No, you're making better decisions.
I know my boss Sophie's going to say, "Why is he talking about diet?" But it all feeds into mindset.
Exactly.
Right? And I can tell my portfolio, my positions, even the interview on air and everything. If you're not in the right mindset, then everything starts to fall apart, and it doesn't fall apart at once. It's a gradual thing.
Exactly.
And if you see your portfolio start to fall apart, then there's a tendency to take more risk because you're losing a little bit. And when you're only losing a little bit, you think you can solve that by taking more risk. When it starts to fall apart, that's when you should be cutting and cutting and cutting.
Yeah.
What in your own investments, you're slightly different in that you don't do short term, do you? It's
occasionally. So we'll do the occasional swing trade, but our swing trade will last 6 months.
Yeah.
So we'll find a very undervalued company which is so obvious, and that we'll get in knowing we've got a target for it, and when it gets there, we're out.
Any examples?
One that you kindly gave me, which we've held a little bit, but we've taken a little bit off the top. Nike is a good example. Marks and Spencer's, another one that we jumped into and did really well out of. That we held a touch longer, so that was actually just under 18 months we held for. But we're out of that now.
So that would have been from sort of £1.50 up to £3 kind of thing. Oh, yeah. Brilliant! Well done.
And we did really well out of those. We've had some losers in there, of course, or ones that we've just had to stick with because they haven't moved.
Yeah.
But it only takes 1 or 2 winners, and that's the way that we like doing things. But you're right. Like we like selecting smaller. Not smaller, these are billion-pound market cap companies, but they are smaller in terms of comparison to your Magnificent Sevens, etc. Yeah. We hold them for 3 to 5, so we're really targeted about where I place. I say I'm targeted about where I place. Like I don't go into biotech or green energy or these things because I don't understand them. And so I spent all day in fintech and all day with e-commerce businesses. Yeah. And so I have such a better understanding of those spaces than others. So I stay right in my own lane. And if Dave down the pub tells me about this fantastic new company which is going to moon, I just forget about it.
That's the one to avoid, isn't it? And I just fear, we have a wonderful Discord, and this has been started by one of our viewers, Maturin, and it's going really well. And it's built up to now 100 people. But the guests that we come on do talk about smaller companies sometimes. And we've seen, Smarter Web, and I certainly, got involved in the Smarter Web. The smaller companies, when people are passing around ideas on things like Discord and Reddit, was a good example. They're great in bull markets, but boy, oh boy, do they come off hard in unbull markets, let's see. It doesn't necessarily have to be a crash or anything like that, but liquidity dries up and disappears. Yeah. Have you had any shockers where you just suddenly, why is it down 20% kind of thing?
Yeah, look, it happens all the time. And I think that's what we need to say and have that and bear that in mind is, you're going to go through a correction, stock market crashes. We all know the numbers, and it's every 3 years it's going to drop by 20% or more. And so you've just got to be wary of that. It's how initially when you start investing, you perhaps take on a lot more risk than you're actually physically comfortable with.
Yeah.
And then once you realize and you have these drops and you're like, oh, I don't like that, I'm going to de-risk myself a touch now. And that's why I follow the 80-20. I like 80% in index funds, 20% is fund money. And that's the way I call it.
Right. And that's 80% of your total investment pool, or your SIP or ISA, or?
Total investment pool in index funds. In my pension, for example, I'm just straight index funds. I just leave it, let it do its thing. Occasionally I'll come in and out of touch or go more to cash and pull back up. Usually after listening to you, Rich, in all honesty. So it's been good recently. The main thing is really for me is I used to be 80-20 the other way around, and I went through multiple drops and crashes and just didn't really enjoy those periods as much. So right now we're actually more about 70-30 because we had some storming growth from some of the companies in there, but it will be time to rebalance, I think, very, very shortly.
Right. Palantir?
No Palantir. No, it's just not in my lane. So I tend to stay away. The only ones I have got in, for example, is Nike, like we've mentioned, is just I buy everything Nike. Danielle in the studio will know, like my entire wardrobe is Nike, and I've had to stop buying it because I basically give them all my money. But I love the trainers, and so I just love the business, and so that was a bit of a different one for me. But Marks and Spencer, as I'm sure I mentioned earlier, people might say it's retail, but actually a massive part of that business is e-commerce, and they started to turn around online massively at the time I got in. And they brought a new fashion designer in, and they started bringing Reese and Jaeger in, and it was.
I only noticed that last week that they've actually got brands now.
Yeah, loads, and the stores are amazing. If you go in there as well, like menswear in there, it's just phenomenal. So yeah,
Potentially time to take advantage of the cyber attack that they went through recently.
Really interesting. The stock price didn't move much during that period, which is quite like eye-opening.
It's telling, isn't it?
Yeah.
Okay, back to your podcast then. So 153 episodes. I'm sure it took a bit of time to get going. But of everybody that you speak to, is there a recurring theme when it comes to investment and managing your money? Is there a real thing that sticks out that perhaps the viewers could benefit from in their investing as well?
Yeah, it is the same thing. But every year, we've had some investors that have come in that have been doing this 30 plus years. And every single one of them is just like, always says, you just got to be patient. It doesn't happen as fast as you want it to. And they've made most of their returns. We've all seen their own Buffett returns after his 65th birthday. But it's so true. And people just inherently just completely forget that, and they think that they're different, and the fact is that they're not. And so you just have to be patient. Yes, you're going to have a great year, but it's going to be followed by a bad one or a stagnant couple. And so I think people get really carried away and just need to lengthen their
horizons.
Yeah, and gratification and the way that it works.
Well, this is life as a whole, isn't it? And it takes us back again to the eating thing, right? It's that instant gratification that people are chasing. Chasing more than 25% gains in a year is going to be problematic. We had a long conversation on the podcast yesterday and before the podcast as well. It was probably more heated off camera than it was on camera. And in the art of investing, we have had a really incredible 2-month performance. Now, we're getting close to our target for the whole year. Is the whole market demonstrating some kind of greed at the moment?
Absolutely.
And, we know what happens next, don't we?
We do. And you came on the show and said it was going to drop by the amount that you said it was going to drop, and it happened within 3 days of that show. And we had to rush to get the episode out because it was so timely. And we've seen the indicators; they're all showing it's extremely overvalued at the moment. And I think it's time to perhaps protect yourself a little bit. If that was me, I'm not saying that's not financial advice, of course, but I think it's grown to like insane levels again. You know, all the indicators are showing that. And so I think it's a little bit of a time to just perhaps evaluate what's going on and if you've got any sort of wide open positions.
I always love, especially on Fridays, I love when people take their balance at the moment, right, what the account is sitting at, and then, right, now take that number by 20%. How does it feel to be looking at that number 20% lower than your peak?
Yeah.
Are you happy with that? If that doesn't really disappoint you, then you can still take risk. But if it does disappoint you, time to rein it in.
A good way at the moment is a lot of these accounts are giving you interest on uninvested cash. So ask yourself,
IG, 4%.
Exactly.
Yeah.
So like ask yourself if you're happy with almost like the inverse of that. Well, if you went in some of it in cash and you made 4% out of it, or you lost 20%. Yes, you know, you're not getting your 10, 15, 20% gains from that point on.
Yeah.
But your protection at that point when you can see that the indicators are showing. So I think the introduction of the uninvested cash element in a lot of these accounts is like enormous, because it just gives you that like a little bit of safety. Oh, I don't need to then pull that out, put it in a cash ISA just to get something off it. You can just leave it in the account ready to go. And I like having a little war chest. I always have 3 to 5% in cash, and I'm probably pushing a little bit higher than that now.
Because life can be expensive, can't it?
For sure.
And if only there was an app which helped life be a little less expensive.
I like what you did there. Yeah, exactly.
Now, what is this new what do they call it? String to your bow.
String to the bow, yeah.
Yeah, tell us about, maybe we can get it up on screen as well, Gains app.
Thank you. Yeah, so we have spent a lot of time making content in the space. We deal with people at mass scale. We do about 130 million views a month at the moment. It's nuts. And so with that comes a lot of data and a lot of questions, and we are seeing what people are struggling with most. And yes, we know more people should be investing, but the day-to-day management of their money is a massive, massive problem. Yeah. And so we've created a budgeting and cashback app, which is powered with AI and open banking. So essentially we can personalize someone's spending insights. So you can essentially download the app. It will be out later in November.
Right.
And you connect your banks. You get a 360 view of your money, your savings accounts, your credit cards, your investment accounts, exactly what's going on. But then the AI can analyze those and give you insights and things to do. But it can also then save you money on the front end. So when you're everyday shopping, if Rich goes to Tesco, I go to Sainsbury's, it's going to know that. And it's going to give you instant cash back offers.
Aldi for me.
Aldi for you. Yeah, I'm more Waitrose. I do apologize. So it's really cool because it's the day-to-day spending of your money. At the moment, what you would have to do is you'd open your banking app, your budgeting app, you'd have a spreadsheet or a bit of paper, and you're writing out how much things. Here, you can just come on and go, how much have I spent on takeaways last week? You can actually talk to it as well.
Right.
And it's going to go, bing, you spent 74 quid in these retailers. And so it's going to really have that sort of instantaneous view around your money.
Yeah.
Getting you the answers that you want to kind of help you plan ahead for those bigger things, those moments, or those investments that you want to make as well.
So out in November, but you can join the wait list at the moment.
You can indeed, and you can get every single person that signs up to the wait list gets entered in to win their shopping paid for an entire year.
For a year?
For an entire year.
I'm sorry, I'm not Aldi. I take it back.
You can go wherever you want. You can choose it. So we'll pay for your shopping for an entire year. Yeah. It's going to be one lucky person.
That's unbelievable, right? Everybody on the wait list, come on, you got to share it, right? If one of our viewers wins it, I want some involvement in that.
Free shopping.
Have there been any funny moments on? Go on, take us through your...
It's Michael.
Is it what you mean?
It's Michael. He said something that just got me at the core, because it has its funny side, but what he said was quite powerful. And he was saying, you know, you should shop local and stop giving money to big corporations.
Yeah, he hates.
And we were talking about Starbucks,
yes,
and how his literal hatred for it. And then he dropped the bomb that the coffee tastes like burnt cigarettes. And I was like, I couldn't. It was one of those moments in the studio that I couldn't stop laughing. We had to stop recording because the way he says it is so dry. But unfortunately, because it's a money podcast, it's not like a comedy show. I think a big thing is to tune into Rich's episode, and watch his prediction.
Well, we got another one. We're just, yeah.
The timing is perfect again because we seem to be at almost exactly the same point. So it's be interesting to run through this time.
Actually, I'll have to watch it back before Monday to make sure I just don't say the same thing again because it feels like it. But let's take a look at Starbucks because I've had a couple of very smart people, including Julian Wheeler. Starbucks is one of his favorite shorts. And that's the second really smart person that I've heard. So, not just Michael talking about how bad the coffee is. This thing is showing really poor price action compared with what the S&P is doing. And I just want to keep that in your mind because Julian thinks it's going to 60. I could definitely see it at 70, which is a good sort of 12% lower. Starbucks, Julian's point is that it's going to have to shrink to start growing earnings again. He cannot grow earnings off the current base at the moment. So,
yeah, well, they're closing a lot of stores and they got rid of a lot of staff, especially in the UK. And it doesn't seem to be getting much better across the world as well. So it's a very interesting one to be looking at in terms of that at the moment for me as well.
Yeah. So, anything else any other stocks or companies or indices that you've got your eyes on at the moment?
So I'm not adding at the moment. I'm being very careful. I've kind of got my positions. I have a lot in fintech in the US. I have the likes of SoFi and dLocal and Upstart as well. I love those types of businesses.
Take us through some of those. Sorry, I don't know SoFi.
SoFi are almost like the British Monzo, the American Monzo. They have a wide berth of current accounts, but they also have kind of like an embedded IG into them as well. They do crypto loans. They started out as a student loans company,
okay.
And then have developed a sort of full financial suite. The CEO, Anthony Noto, I find very impressive. And it's that real challenger bank. And I think the US at the time was kind of ripe for that, as we've seen with the rise of Revolut and things like that as well across the world.
Yeah.
I think the US was really ripe at the time. And I've had it for quite some time now. And every time it drops back down, it's had an incredible run.
It really has.
And it's one of my favorite holdings.
For anybody watching, that was $10 back in the April sell-off, and now it's 28. So 280% return. Nicely done, sir.
Yeah, it's been great, and we will continue to add anything above sort of 15 for us, because I think that below 15, if it drops anywhere back down at those levels, like we will be very hungry.
Yeah,
because it's growing.
And we do have to touch on that in that. I'm 100% cash at the moment. Anybody, now that is really making a strong statement to, I think we get a correction. Don't know if we get a crash, but we get a correction.
You're 100%.
100% cash as of last week.
As of last week?
Yeah. SIP, ISA, pension.
Oh, you went big.
100%.
Oh, interesting.
Yeah.
Okay.
So I should have
kept
kept that for Monday.
By the day. Yeah, no, fair enough. I'm going to have to ask you about now.
Well, yeah, and I'm not pretending I can call the top, so it might go on for weeks yet. In 2017, going into 2018, I was a month early. But then we got a 10% correction in a day, right? And that's what it feels, that I feel like we're building up towards that.
I have a question for you, if you don't mind. What do you think the catalyst will
be?
He
can't help it. The interviewer.
100%. It's just, I was discussing this yesterday with a couple of people and they had different answers. And I'd love to know yours. So like, what do you think is going to be the trigger this time? Because the last one was Trump.
Yeah, and this came up in our own podcast yesterday in The Art of Investing. We were saying there's no way you can ever guess what the catalyst will be, but you can certainly watch out for the canary in the gold mine. And that's what we're going with at the moment. Is obviously gold has, in my opinion, has now become a risk asset.
Yeah.
The First Brands credit implosion, right, is a mini SVB moment, and the market has not blinked, right? You've had a huge business which has cost private equity and the banks, in the hundreds of millions. So I do think that is that the start of something? Maybe in 3 months' time we see more private equity deals that have gone really bad, and they actually have to write the real figures down. So leveraged private equity are certainly two potentials.
Interesting.
Samuel King, thank you very much for coming in.
Thanks, Rich.
And it's been really interesting. Money Gains on the YouTube channel. It's easy to find, isn't it?
Yeah, very easy. Yeah.
Sammy, we'll see you Monday.
See you soon.